So now we will go back to talk about startup cost. As I mentioned before, there will be a variety for startup costs and how you calculate it and the deductible amount and how much you should deduct in the first year and how much you should amortize over 15 years. Now, this little box, the capital, estimated, actual, over or under, you don't have to use all this stuff. It's for you. You could use it if you have business plan, if you want to use it, if you don't want, that's fine. The most part we care about it is the cost, the startup cost, and this is how we're gonna calculate our startup cost now. As I mentioned, there was a lot of expenses considered as a startup cost, which is any ads, any survey, anything you do before opening your store, that will be considering a startup cost. If you decide to start working in your company or your online store, since you start and you start preparing for it, you can get the home office, or if you rent a space, the remodeling, if you order some new furniture, if you order like a piece of a camera, if you want to like just do a video game, you want to do a YouTube channel, you just ordering all this stuff, it will be considered. If you ask for any license, permits from the city, from states, that will be added. The legal fees, very important if you start an LCC and you want to add the professional legal fees for the lawyer or the company, whomever who does it for you, you will be added. And we can go through it all. There's a lot of things, supplies, prepaid, installations, anything you paid before starting the company. Anything you paid for, I will consider a startup cost now. So we have the three columns, which is estimated and actual, again, under or over. The only one you have to follow is the actual. Now, the other two just for you, again, if you have a business plan, if you're willing to have a business plan, and anything like that. Now, let me change this one over here to show you. So now, my total actual cost is 1400. So, the deductible amount in year one will be 1400. The amount will be amortized over 15 years, gonna be zero. Again, if your total cost is less than 5,000, it will be all deductible, all of it. Now, the only issue we face if you startup cost was between 50 and 55. That's the only issue, and as can be seen, the Excel sheet will be working on it now. Let's do now right here 50,000. Sorry, I missed 10. Okay. So we can see now our total startup cost is 51,000. So the amount will start phasing out, is phase in and phase out. So the deductible amount in year one will be 3,600. However, still the 47,800, the remaining from the 51,400, it will be amortized over 15 years. So you're not losing it. It's not gonna go away. It just needs to be amortized over 15 years, and that's specific numbers. 15 years is fixed. It's not gonna be changed. There's nothing to worry about. Now, if your total cost was more than 55,000, so your total cost now 56,400, you will be able to deduct zero in year one, and the 56,400 will be amortized over the 15 years period of time. So all you gotta do, if you start a company, if you want to start a company, you have to use this Excel sheet, and it will tell you what to do exactly, how much you amortize and how much you can deduct in year one. Now, we will go back now to the daily expenses. Now, I care a lot about the daily expenses. Revenue, you don't have to do it. I highly recommend you do it. It will help you to see your total revenue at the end of the month, the end of the year, so you don't have to go back and miss this and miss that. Especially if you're opening a store and you deal with some cash, it will be very important to do it on a daily basis, so you can keep an accurate record for future purpose. And if you get audited, if you have any issue, it's just give you an overview about again your financial health for business. Now, the expenses one. So that's the major important one. Again, that's a schedule. It is as should be. It's 100% right. So I made it that way. That's the best way that if you've been audited, that's what the IRS is gonna ask you for. Your date, description, amount. That's the only three things you need. Now, these two things is gonna help you to recognize your expenses at the end of the year, because at the end of the year, once you go to report it, in your taxes, you have to report it in specific things. You can just, I mean, you still can create a new one, but you're gonna have a lot of options. You can still add to it, but that's basically what you're gonna see in the in Schedule C once you follow the Schedule C online, or however you're gonna do it. And the month is gonna help you to calculate your total expenses monthly instead if you have to go through all of them. Now, let's make an example. So let's say you bid for Facebook ads. So just write Facebook ads, and right here, and you're gonna see print the date, so you don't have to worry about the date. It's already printed, and the amount 500, let's say, and then you choose it from this list. Let's say advance January, and that's it. That's the only thing you have to do. Simply, easily. There's nothing to worry about now. If you received a letter, you're gonna be audited. All you gotta do is just to print A, B, C, and send it to IRS. There's nothing to worry about it. You will be 100% ready to go. You don't need to ask a lawyer. You don't need to ask a CPA. That's the only thing they're gonna audit. That's the only thing they wanna see. That's what they care about. If they ask you for something else like a revenue, they might ask, they might not ask. But basically, the major audit usually in Schedule C. That's where things get really messy. Now, you can see my list here has a lot of things: insurance, business travel, food, supplies, home office, rent office, other rents. I mean, you might be renting a car, you might be renting a copy machine, you might be renting a lot of things, any other. Now you still can add to this data. So data validation, and here we go, column D. So you still can add it from here as I showed you. You just go through it, done, and you can add. Let's say you want to add, maybe you have an Amazon fees. You can say Amazon subscription or any type of subscription. Let's say you got any type of subscriptions, you can add it right here. So it's gonna be in your list. Now, keep in mind, we don't want to put a lot of expenses under others. The more you give detail, the more likely the IRS will audit you. So, for example, let's say you have Amazon subscriptions, you have other subscriptions, maybe newspaper, maybe channels, maybe an apps you use, and you put all of them under others. It might be shows like a big amount at the end of the year, like maybe 100,000, 50,000, 20,000, 10,000, and keep in mind it has to be relative to your income. Like that, like it could be 10% from 100,000. It's like 10% of maybe 1 million. So it doesn't really affect. Sorry, 1% of 10 million. It doesn't really affect. So the IRS won't really care about. But if you have, let's say, others, and you have 10,000 others, and all your expenses like maybe 20,000, the other expenses 20,000, 30,000. Well, it will be like, well, what is others? So it's gonna be okay. Like they want to know what other means. What do you have in others? So I highly recommend, guys, if you have something happening on a regular basis, any kind of subscriptions, just to add it. And in Schedule C, we're gonna have an others where I'm gonna show you how you could add other listing and other stuff and other expenses. So the more you give details, the more likely you don't have to deal with the auditing thing. And the IRS usually they're not gonna audit anyone or less than $70,000. That was, but it's really important to know that with the next decade, 10 years, the IRS is hiring They say they want to hire 87,000 people to work in auditing. I don't believe they will be able to do it. It's a large number. They want to audit people as much as they could the next decade. So you have to be very careful about it, guys. And that's the best way. Now, that's how auditing done for Schedule C expenses. Date, descriptions, amount. That's all what you need. As long as you have it right, you don't have to worry about it. You don't have even to worry about it. Now, we're gonna move to the monthly expenses. Now, the monthly expenses right here, just for you to see. Now, as long as you did the daily expenses, that's when it's gonna be auto-filled. You don't have to worry about it. You're not gonna fill anything here. You're just gonna take a look at it and see. Like we could see here, like was like net gain lot last January. There was the last 500. Uh, November loss, December loss. Here you got like the total loss, which is the end of the year. Now, just simple. You can keep tracking of your total expenses, your total revenue, your net goal, your net loss. It's gonna show right here in the data. Uh, just be general familiar with it. Keep looking at it. Keep watching. See if your expenses has been changed a lot, decrease, increase. I mean, it's obvious the numbers. See if your revenue increase, decrease, the profit, the loss. Now, a last thing we want to go through which right here is going to be the yearly summary. Now, this yearly summary, you don't have to fill anything right here. You don't have to, it's going to be an auto-fill, auto-generator. All you have to do, just fill the daily expenses. Now, from the daily expenses, it's going to auto-fill the monthly statement, and then it's going to auto-fill the yearly statement. Now, we can see right here, those the items we do have in daily expenses right here. Show you again to check it, all those. So that's why you have to check them, and then they will appear right here. So let's say we get contract labor. Let me just change one of them to see how it works. Okay, contract labor, January. Okay, here we go. We can see there's a loss because we didn't have any revenue. And right here, I guess we have to refresh it. You just need to refresh it. I guess the internet disconnected or something in mine. So it will as long as you choose the type of the expenses, it's gonna collect them. Now, if you add, let's say like Amazon subscription, you can still write here Amazon subscriptions, and from the data validation, you can get it right here. It's gonna show your total revenue, and it's gonna show the total revenue right here, and again the total expenses, the total revenue, and your net profit or loss at the end of the year. Now, the net profit and the net loss is very important because that's how we can calculate the self-employment tax, the 15.3. So it's gonna be based on this amount, which is that's what we call it, the deduction that you're gonna get all this deduction. Then you get the net profit, you get the self-employment, you're gonna calculate your self-employment taxes, and then we will in schedule 1040 to do your standard or itemized deduction. But basically that's all done before, let's say before doing the 1040. That's why it's kind of in the middle for, that's why it's an additional 4, and it will go back to the 1040.